The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 21st. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We need to make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to call on in, 877-927-6648. Of course, if you can't call or don't want to call, you can always send me an email, steve@tfnn.com. Just inside that subject heading, just put radio show question, something along those lines. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Hope you're having a great day. This is Steve Rhodes, and of course, this is Tiger Financial News Network. Let's go take a look at the markets. The Dow right now down 41 points. She's trading out at 21,571. S&P's off 1.5, trading at 2472. Nasdaq is down 2.5 points. Russell's off 4.5 points. Semis are off 9. That's 0.8% to the downside. They're the leader percentage-wise, if you will. Today, you've got gold up 0.7%. The same thing with silver. That's $8.11 respectively. Light sweet crude getting hit in the shorts. Down nearly $1, 2%. Natural gas is trading a bit lower. Bonds are up, leading the charge the upside. Athena Health up $9. AutoZone up about 8 really. Tesaro up 7.40. Capital One Financial up $6 to the downside. Intuitive Surgical up $36. Auto Live down $9. Chipotle taking it in the shorts for sure, down 8.60. Chipotle's underneath a fairly major swing point out here. Could be an A to B equals CD to the downside. Fizz, oh, what a relief it is. National Beverage Corp down 5.70. Cooper Company's down $5. Of course, I want to look at what you want to look at, and I can only do that if you send me an email, give me a call, or an instant message like we have right now from our man Z inside the Tiger's Den. And just a statement. Nice how the NASDAQ 100 tested and rejected Tuesday and Wednesday's gap. Well, let's go take a look at that specific point. So let's go take it. Now, the point that was being made there is that gaps are your friends. They're not your foe. Gaps are what we'll call breakout areas. Now, what we don't know when a market breaks or when it gaps, what we don't know is at the top of the gap. And the top of the gap here, I'm going to say, is going to be when you gap to the upside. The top of the gap is going to be that candlestick where price had gapped, and it's going to be the bottom of it. The bottom equals the top. I know it's just like basically illogical thinking, but welcome to my world. So the bottom of the top of the gap, if you will, is 58.95, 54. And today, thus far, the low has been 58.90. We're trading right now at 59.18. So prices come back to a level of support and tested it. The one thing I like to see with gaps, I like to see them tested 3 times. Through the third time's a charm, so to speak, out here. The reality is, look, we've got a breakout. There could always be a breakdown. There could always be, some some stuff that happens over the weekend. Futures start trading at 6 o'clock Sunday night. You wake up Monday morning, you come in, and NQs are down substantially, and you get a gap to the downside, creating an island top out there. I mean, I don't know. Even if you did, though, what you do is you go to the next gap to identify a level of support, and that takes you to July 12th out here. So it is nice. What the NDX, in essence, was doing, though, I think, Z, is for me, it's easier to go take a look at levels of support and resistance. And those are easier found, in my opinion, by taking a look at what's going on in the futures contract. And we looked at this yesterday, so I hate for today to be a repeat, but this is really how markets work out here. And it's the center panel. It's a 240-minute time frame chart that we're looking at here for the NQ. And it still is a significant area of support. We've seen that now because over the last couple of days out here, we've seen this area tested and rejected 3 times. Perhaps third time is the charm out here. Now prices try and head up towards the high of that box, which is 59.25, 59.25 to be exact. The downside was 58.95.52. Now look, the low this morning was 58.96. It wasn't 58.95. Cut it a little bit of slack for a 6,000 value instrument out here. But what we know is that price is just really consolidating. Now, of course, we know that that's not how tops are formed, or major tops are formed inside of a market out here. So we just have a sideways consolidation. And sideways consolidations up at highs resolve themselves to the upside, not to the downside. But a consolidation is a consolidation. And whichever way the market breaks, you then have, in essence, a measured type move out here. And that's a 240-minute chart. That's a key area of support. If that thing breaks, if we see it close below that, where could price head back to? Well, that is, the reality is 57.96, 100 plus points, 57 to 58, yeah, over 100 points to the downside. There still would be nothing wrong if that happened, other than it would be putting pressure on the long positions out there. But that's really what you would want to go ahead and anticipate. I would say 57.96, but then, of course, I'd always come back and see where my red line is, and that's at 58.50. So it would really be a retracement or a pullback to 58.50. Is that what's going to happen out here? I don't know. I don't think so. I think the NQ is in the formation of an A to B equals CD to the upside. Which version of that A to B equals CD to the upside? I don't know. I've said I don't know a few times out here. The 1-to-1, though, takes you up to the 61.13. See, I would say just as important as testing that gap from the bullish side is this week, is today, closing above that swing point from June 9th, right? One way to look at it is if you close below that, which is 59.0750, then you could say, okay, on a daily basis, maybe we're inside this consolidation range. That could be its message. That consolidation range, folks, little sideways rectangular box really would look like that. So if price is able to stay above that B point of that A to B equals CD to the upside, to me, I think that will be, more bullish. Is it bearish if it closes underneath it? No, but I tell you, it's got to make the sphincter muscle tighten up just a tad out there. Perhaps too descriptive for you, but descriptive nonetheless. Right now, the Dow's off 36. S&P is down a point. We get back from this break. Let's go answer Lou's question. Should he stay in the Nuggets? NUGT. You're ready? Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade Charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 38, S&P down 1.5. So you may recall, I think it was last week when Lou called in, and Lou was looking at getting into the dust trade out there. Now, dust is the three-time bear trade for the miners, and at that stage, I had to be completely honest with him to let him know that I was on the other side of that trade, not just I, but myself and subscribers. And so we were looking at the mining sector going long, and although I don't recall saying go ahead and buy it, I did simply share with him he should be looking at that side of the trade, which he did. And versus the short side of the trade, and I think he's in around the 29 area. It's at 31.54. So, Lou, to answer your question, your email, thanks for sending an email in. If I just look at market profiles as one example out here are the daily profiles. You're above them, 28.88. So that is a bullish type signal. If I look at the weekly profiles, well, you've got a long way to go before you come up into any resistance. 38.65 would be its number. If we turn on volume profiles, so to speak, right? If we turn on volume, right now you're moving up into, an area that had 8 million before, 8 million shares, 9 million. You're doing with 4.8. So we're coming into an area with lightish volume. Doesn't mean that it won't go up to the high. So, should you hold on to this? I can share with you that I'm going to hold on to my GDX trade and my GLD trade, but that doesn't mean that I'm not anticipating some type of pullback or some type of retracement. So I just want to be clear on that. And the reason why, and this is where you've got to use subjectivity and be able to say to yourself, okay, where did I get in? Is it worth the reward to risk? Do we think this is a longer-term bottom? Is this just a quick short-term trade in commodity land? You never know out here. What we do know here, by the way, this is the nugget, Lou, and the bottom panel of the chart is gold. And this is just looking at a 5-day correlation between the two. Remember, when you're above zero or close to that one level, like right now you're 0.96, it means that we have a positive correlation. The two move together. And when you're down below it, it says the two things are moving in an inverse direction out there. So we see we've got that positive correlation, which then says, well, we really need to take a look at gold and try to determine what do we think gold is doing. And then, of course, that means we have to go take a look at the yen currency pair, or in this case here we're looking at yen futures, since I don't have a 15-minute delay on them. Now, the nice thing about what yen futures have done is they've cleared resistance, the resistance of its daily profile. Now, this resistance out here had a bearish structure. So the mere fact that we are trading above 0.8985, I believe, is the 0.8985, is a very bullish event out here, assuming that it closes above that. The question is, when you break out above resistance, where's the next resistance level out here? Well, it's hidden. It's not shown on this chart. That's the daily chart. It's not shown on the weekly chart. It would only be shown on Stevie's special chart out here, where we have a number of different tools. One of those tools being Tom DeMark counts out here. And the Tom DeMark setup counts out here when you start where you have the number one beginning. When the 9 count completes, we then draw a little dashed line, support or resistance line. And so we can see here's the little green dashed line out here, and we're coming into that with a nice wide-ranging bar. Today's going to be count number 7 out of 9 that you can have on that initial setup out here. But price is right up against a resistance level. So I don't know, Lou. Again, I think you're more short-termish type on the trade. The yen could be up against a decent level of support. In essence, when I look at these Tom DeMark lines out here, I really use them as our guideline for the 100% move of a move. It's another way to take a look at where price really had momentum and began breaking out, because you need 9 successive closes each bar that is above the bar 4 bars earlier. You try saying that without going to a bar out there. And so what I do know is they are great levels to be watching, not hidden when they're on the charts out here, for support and or resistance. So the yen is up against that. Now, utilizing this system out here with 9 counts, market could go sideways, could keep moving to the upside. I don't know the answer to that. Did I say today? Yesterday was day 6. Today will be day number 7 out here. Doesn't mean it has to stop. I just want you to know that it's up above. It's at a resistance zone out here. So, what do you do? What do you do? I'm just sharing with you. I'm not sending a note out to subscribers saying, hey, it's time to go ahead and close out the trade. We got in at a good time to get in on this trade out here, so there's no reason for us to go ahead and close it out. And that time period that we got in was right here on July the 11th, right here in essence when the yen was making its turn at the bottom out there. With regard to gold, gold continues to move up nicely. Nothing substantial. As we take a look at gold, it's up, $8.50, but that's better than a sharp stick in the eye. So it looks like, and we're both long gold and the mining sector, not knowing which one is going to outperform. And today you can see that gold certainly is outperforming the GDX, which is up 0.4%, and gold is up 0.7%. It's not like it's a huge difference in performance, but I will stay with the GDX trade, and we'll stay with it as long as we possibly can out here. Now, if back to the yen, if the yen is able to continue to move higher, and you got a nice wide-ranging bar coming into resistance, just says that we get back to the swing points here in the middle of June. So if, in fact, that's what's underway, and we have a V for victory type of formation out here, that should bode well for the metal, most certainly gold, and it should bode pretty well for the mining sector as well. Okay, so we've got that out of the way, and so what do we go take a look at next? What do you want to look at next? Not even a question inside the Tiger's Den. It is everybody must be zoned in on Sean Spicer or Spicy-Bo. Or they can't be on the British Open. I think they're in a rain delay, are they not? And the weather was just kind of starting to turn bad, which was going to make the tournament seem somewhat fun, although it was just raining. The wind had died down. I don't know. Let's go take a look at light sweet crude. Oops, let's go switch to the proper page in order to do that. This has kind of been all over the place, kind of a basket case scenario out here. But right now, what light sweet crude is doing, it's clearly rejected resistance out here, and resistance was the top of its daily profile, 47.14. We did get a slight close above it a couple of days ago, but there's no reason for light sweet crude to not head back to 44.19. Now, how will we know if that's what it wants to do? Well, it's going to have to break through Stevie's red line first. So let's go take a look at the first area of potential support. And maybe light sweet crude is already down below that, but we're going to find out post haste here. Or we're going to try to do it before we go into the hard break. 45.53. 45.53 is the number. If light sweet crude tests and reject it, no big deal. If it closes below it, then you're going to see 44.19 in a matter of seconds. I'm just kidding, but you will see 44.19. Steve Rhodes with TFNN. Good.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 44. S&P is down 2 points. So we got an email here from Lynn, and Lynn writes in and says, Steve, loved the show. You sound a little starched today versus normal. Everything okay? And would you take a look at Visa for me? Let me know where this is going to long term. So thanks for writing in. Absolutely. We'll take a look at Visa. And I'm sorry that I sound a little bit starched. Probably I am. The reason is this week is I work out at a gym every morning at 6:30. And it's so I think I've shared this with you. It's called Orange Theory. Don't know if any of you work out at Orange Theory. It's a pretty intense workout for it's about 55-minute workout. This week is what they call peak week, and peak week is where you put your body to a test. For example, on Monday you do Monday was a 500-meter row. Might not sound like a lot, but you're going at it at full out speed, or you're trying to. That's like a third of a mile, roughly somewhere right around a third of a mile, which I do in about a minute and 29 seconds is my speed pretty much on that. And then on Tuesday was a 24-minute run. So you just simply go all out as far as you can in 24 minutes. I'm not really a runner out there, but I did it, and did a personal best out there, so that was good. Wednesday was just a bunch of gym work. Thursday, yesterday was when I really should have sounded starched, because that was a 2,000-meter row. That one will test everything. The 2,000 meters, that's a little over a mile, right? A mile and a quarter, something like that. That I do just over 7 minutes, but you're pretty much, your legs are shot. And then today was how fast can you run a mile? And for me today was a personal best. I put everything into it, and so probably a little bit starched, but that's neither here nor there. And that workout facility is probably not really meant for the AARP group out there. Most people are in their youth, so to speak, out here. Two youths. In any event, if we take a look at Visa. Let's go try to figure out where this thing might be going to long term. Let's take a look at them. Well, this week, hey, you're in a nice. You have a nice investment out here. You're near all-time highs, 99.90. And a stock chart like this, basically, it's pretty much nearly impossible. From my standpoint, to try to figure out where in the heck is it going, at least looking at it like this, right? There's no real A to B equals CD. There's no left side history that we can go take a look at. But the only thing we can do is, you said long term. So, this is American Express. We were looking at American Express for someone the other day who wanted to short it. And thankfully, I think we kept them out of that short. Because this stock chart still looks pretty good. It doesn't look as good as Visa does. So if we put the Visa chart up here, do we see anything that's wrong with it? And gosh darn, we do not. I don't see a time to mark count. Price on the monthly chart is moving higher with energy out there. You're only in count number 7, perhaps. So this has got a lot of momentum from a monthly basis to the upside. I know you asked for a price projection. I don't know that I'm really going to be able to give you a good price projection on that. Let's see what the weekly chart shows us. The weekly chart just shows us that price has extended itself with less energy. Last time that we saw that, where we received a bearish signal, was back here in September of 2016. And then you saw price come down and test one of those TD support trend lines out here, that red dashed area. But we don't have that yet. We don't have a bearish reversal signal on a weekly basis, and as long as price is above 96.83, you stay with it. Now, the weekly chart out here, maybe this gives us a little bit of an A to B equals CD pattern that we can draw for you, just to go, well, yeah, the more you pull it back, you're just kind of like saying to yourself, I don't know, where would I really draw that out here? You've stumped me. That's sorry about that, Linda. Where is it going? I can't really even put horizontal trading range boundary lines on this chart. I mean, I can try, but because there has never been any sideways base to speak of, there's just not a whole lot out here. Let me see. I think I've got one for stocks. I'll show you. So as an example, Netflix is kind of another example. Stocks that go somewhat vertical. Yeah, I mean, it freaks out my system. It doesn't even know what to do. And I'll turn off the dailies because That's just simply not correct. And I'll give you about the only thing that I can provide to you with regard to where Visa might be headed. So let me turn off those daily profiles, or not profiles, but horizontal trading ranges. And I would say, Lynn, 124.35 is likely where it is headed to. So thanks for listening. Thanks for writing. And thanks for your concern. I will take the weekend and rest up after tomorrow's workout. That means just Sunday. The day off on Sunday. Okay. No other questions I see that have. Oh, platinum. There was a question inside the Tigers Den. Could we go take a look at platinum? So let's do that. I think that might have been for Mike. Was that for Mike? Who was that for? That was for Mike, yeah. So if we go take a look at platinum out here, Mike, what I've got up on my chart is the October contract. Is that what it is that you're trading? And we've got the 6240, the daily, and the weekly chart out here. And if we take a look at this, boy, everything looks bullish. What do we mean by that? I mean, prices above the 60-minute profiles, they keep forming above prior ones. Prices above the 240-minute, prices above the daily profile. I don't know. Where do you think it's headed to, Mike? Is 980.50? Is that maybe your target out here? Is there an A to B equals CD to the upside that is formed on the daily chart? I mean, if there is, it would look like this for you, Mike, that A to B equals CD would give you a price projection of 961.50 to 974. And since that gets you close to the bottom of the weekly profile of 980.50, I'm going with 980.50 as far as where platinum is headed to over the long haul out there. Okay, so euro. We got to go. I didn't listen to any of the shows today, so I apologize if this has been covered ad nauseum. And if it is, I'm just going to make you a little bit more nauseum, I suppose. Right? This is a monthly chart here for the euro. Let's just switch this back to a weekly chart because the weekly chart was very clear as to what it was doing. Let me also get rid of that pane on the bottom, which is volume, which we don't take a look at. And this is a clear breakout of a rectangle consolidation. Now, there's one last hurdle that really the euro needs to overcome, and that's the high of 117.14. You're not there just yet. But this, you are above that shooting star. That's the last bullish reversal signal we saw up at this consolidation high. That is at May the 2nd, and that level was 116.16. This says the dollar is going to get weak as stink out there. I mean, if in fact this is a breakout, just simply because the weighting structure inside of the U.S. dollar index, the euro, for whatever reason, and until it's, as long as it stays out of this bottom consolidation area, it has a price target of 128-ish or so. C. Rhodes with TFNN. We are back.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I have a request here from Dan. Dano in Clearwater. And you're right, there is no starch in sake. That is a good thing, is it not? And maybe it just has to be Sake Friday. Although, I don't know, I was thinking of doing a little dancing on Friday, just to get a little more exercise in. We'll see. But in any event, Dano says, hello, Steve. If you have time today, we've got the time. Could you talk about emerging markets, currency impact, and what we can expect in the next several weeks with the EEM, specifically thoughts on shorting here? Breakdancing? No breakdancing. No, it's, the push-pull, the swing, the old fogey kind of stuff out there, not the breakdancing stuff, maybe a little bolero or something like that would be good. But so anyways, back to you, Dano, as opposed to speaking to private messaging inside the den. So if we take a look at the EEM, and this is where it gets a bit tricky, right? In order to really talk about the emerging markets out here, and the question is thoughts on shorting here. Yes, shorting, question mark, Mike. That's the thought from Dano. And, right now, let's just look at the stock chart itself and take a look at what pattern. So you've got an A to B equals CD pattern out here. We'll go ahead and turn on the volume metric in a moment. So, Dano, and you're probably looking at this. I know you are a very skilled technical trader out here. And so the B point, just looking at it, just as a straightforward vanilla type operation, September 19th, the week that began, 358 million shares, passed with 429 million shares. So you've got a confirmed A to B equals CD that's underway. It's a weekly chart that we're looking at, by the way, when I came up with that. And this is not yet complete. It gets complete at about the 44.64 range, which is a test of the swing point from April in 2015, which had 263 million shares that week. You are trading into it. You traded into it last week with 250 million shares. So what does that say? You're coming in with about the same volume. It really says this A to B equals CD pattern should complete. Does it have to stop at 446? Positively not. Could easily move up to 47.56 or get back to the swing point area from September in 2014. Now, that's just taking a look at the EEM chart out here. So we've got to go with the fact that this still wants to move higher before you would go ahead and take a look at shortiness. But that's really not. You asked me to talk about it. Let me just make sure here. So that opens up like a whole wide. Yeah, if you have time, could you talk about emerging markets and currency and so forth? So that opens up a can of worms when you're that vague, because you never know what it is. I could talk about dancing for all you know. But here's what you really have to do, right? You've got to go to it says Pro Shares or iShares. I don't remember which one this is, one of the shares out there. And you have to open up the EEM, and you need to understand the weighting structure inside here. And you know what countries you're dealing with. So you've got Korea has the #1 weighted stock inside of the EEM, and that happens to be Samsung. And you really should go take a look at Samsung, figure out what it's doing. Then you want to go take into Hong Kong and to China and take a look at the Tencent holdings out there. Then you go over to Taiwan, because that was #2. 3.5% is the Taiwan Semiconductor. Then back out to China for Alibaba. Then over to South Africa and take a look at Naspers Limited. Back to China in the financials, looking at China Construction Company, China Mobile. And then you've got Taiwan again for Honhai Precision Industry out here. You've got so a lot of Asia in the top 10. The top 10 equities out here, top 10 represent 23.79% of it. So, pretty decent weighting just by taking a look at that. Total number of equities out here, wow, it's got a bunch. Let's see. Looks like you stop pretty much right here. Wow, this has a lot of equities inside here. So we got 860. Now, let me get to the exact number. This is as of last night, by the way, Dano. So there are these. So what I would do if I were you, I would go through here. There's a total of 851. If you really want to try to nail down EEM, do the same thing that we're doing here. Get it into a spreadsheet, download it. Take a look at different weightings. Maybe go figure it out by country. There's probably something that's already done inside the portfolio mix. I just like to take a look at the actual, live data out here, because then when it comes to the currencies, then you need to understand what's the weighting structure inside here from a currency standpoint to help you to make a concern. Because if you were thinking emerging markets, you were going to see a lot of Brazil or Mexico out here. I don't know that Brazil or Mexico make up a ton of the way of the EEM. You've got a little bit of a mix of everything. You got Poland, South Africa, Korea, a little bit of Malaysia. As I say, so to really do to really understand the EEM, you have to understand what it is that we're invested in here. And I think that it requires a lot of work out here. But nonetheless, just typical stuff, the A to B equals CD stuff, we've got that. I can put profiles on here. So here is the profiles. It's going to be the weekly that are going to show up for you. Looks positive. There's nothing bearish about the weekly profile. If we switch back over to a daily chart for the EEM and take a look at it, what are the daily profiles showing us? Those are positive. You're up above those as well. If I take a look at a EEM and look at Steve's other toolbox out here to see what shows up, any other signals. Today's going to be a Tom DeMark 9 count out here. But other than that, nothing that gives us any real indication that this would be a short, so to speak. So now, I think that the emerging markets, you asked the question, if you have time, could you talk about emerging markets, currency impact, what we can expect out here? In speaking to some of my friends in the know, and these are some guys that are in the know, they're telling me that there is a looming problem in the debt market inside emerging markets out there. And these guys, these are big street guys, and that this could be the next area where there could be problems. I can't quantify that, and I'm just sharing with you things or information that I'm hearing out there. That there's emerging market defaults. I don't know that it's in China. So we really need more information out there. Bottom line here, Dano, is I'm not seeing the short. I'm not seeing the short, but I think you've got to go through and do a lot of work on this one. It might be easier to try to find some other equities to short than going through all that work that really would have to be done. It's much easier to trade gold. Just because all you have to do is focus on gold and the the yen, so to speak, out there. To me, that's a whole lot easier. It's easier to trade. Freeport McMoran. You just have to focus on the Australian dollar and the Freeport McMoran chart. When we come back from this break, let's go take a look at the request from Jim in Clearwater. Ticker symbol MBT. See Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So for Jim, is it Jim who sent this? It was Jim in Clearwater. Can we look at the MBT? MBT is Mobile Telesystems, PJSC, out here for the dividend, but to scale in. Can't find anything really negative in financials and has pulled back and possibly consolidated. But you tell me, please. Well, so what I did, Jim, is the bottom panel of my chart here, if this is correct, it's typically correct, shows the dividend payouts that we've seen along here. What you like to see in a dividend stock, what I like to see in a dividend stock is something that's consistent. And this is all over the board with regard to, and what you really like to see is you like to see, right, dividends growing. I mean, you love to be able to see that early. I think like take a look at IBM. I'm not saying go buy IBM. Just looking at, you mentioned dividends, so I'm going to first focus on dividends. If you take a look at the dividend pay, this is a weekly chart, by the way, that we're looking at inside IBM, and look at how if you just simply come back into 2008, they've grown it from 50 cents to now they would just release numbers. I don't have, it doesn't show up here, so I don't know what their dividend is for on this last financial set of numbers out here, but we've gone from 50 cents, continue to gradually grow this up to $1.50, or maybe it's a little bit more than $1.50. They keep reducing float in the market out here. They've got plenty of net cash flow to keep doing this from the dividend standpoint. And we don't see that. I don't see that in MBT. I'd rather see something that was more consistent. If you're looking at, you want to be able to depend upon the dividends out here. MBT doesn't seem to really have it. Now, the other point that you made was that you don't see anything really negative in the financials. Of course, what you and I are doing is we're not looking at anything fundamentally. We're looking at what our shareholders communicating to you and I. And so in essence, you kind of put that's possibly consolidating down here at the bottom. Now, a consolidation would really be moving to a certain extent more sideways. I don't see, this is a weekly chart really, I don't necessarily see that consolidation, so to speak. This thing has been moving lower, a little bit of a counter trend rally last week. Doesn't necessarily indicate that was the bottom inside here. In fact, if I look at the weekly chart, where is it here? Let's pull this over, the same weekly chart. This would have to close above 906 to really get my interest, Jim. That's Stevie's red line. You just had a price oscillator close below zero. It looks like that was probably last week out here. Yeah, it was last week. Now, normally when you get to zero, you start to move sideways. See how last week and the week before this thing has really moved sideways? That's the normal, natural reaction when that price oscillator gets towards zero. So this says, from a weekly standpoint, you want to wait to see what happens the next time that the red line comes together with price out here. What we know right now is you have a falling price oscillator below zero, and I don't care if last week was a bull sash or not. To me, this says that price wants to get back and test the swing points here from November of 2016. So see what happens there. I don't like the fact that it closed below a hammer candle. It says if you're long, you're wrong. I don't like what I see in MBT out here. And if the healthcare bill was going to be passed, which was a substantial tax reduction for the wealthy out there, that was going to say that was element number one for pulling the trigger on the repatriation type companies, of which IBM is right up there at the top. Unfortunately, that hasn't happened, and IBM is now breaking out a swing point on a weekly basis with volume. And that sets up that we can buy IBM at a lower price. And that's a beautiful thing. So this has a confirmed A to B equals CD to the downside now. Maybe we're going to head all the way back into the 2016 February lows. Hey, folks, have a fantastic weekend, fantastic Friday. Be safe out there. We'll see you on Magical Magnificent Monday. Stay tuned. David White, your favorite polar bear mind, is up next. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.